We're here today at the 2010 Fall Outlook Conference for Informa Economics in Calgary, Alberta, speaking with Gary Pike of Pike Management Group. Gary, could you tell us a little bit about what PMG does?
PMG is a producer-oriented decision-making group that works primarily on cost of production, scale of operations, and then integrating that in with marketing and cash flows.
All right, excellent. Let's dive right into it here. With the recent U.S. midterm elections, there's a definite split on Capitol Hill. What impact do you think this will have with the renewable fuels mandate and the renewable fuels tax incentive?
I think the renewable fuels package will go ahead as planned. I don't think anybody's going to be brave enough to kill that. Right now, interestingly enough, on biodiesel, they really don't need the blender credit to keep it going. It's working just fine without the blender credit. The only thing that I would say is that globally, we have such interest in biodiesel right now that if everybody's mandates are going to be met, that they're putting forward, that are going to come on over the next 5 to 6 years, that we are going to have a difficult time having enough biodiesel stock to build all the biodiesel that the world wants. It's really quite interesting, and there's a lot of countries that are depending heavily on importing canola oil in order to do this. And sorry, there's just not enough around.
So kind of going back to more traditional end-use markets, what implications do you think this will have on feed in Canada, specifically in southern Alberta?
On the feed side, on ethanol, I don't think ethanol is going to be as big a deal here in Western Canada as what, nothing like the corn side. It's going to result in a lot of DDGs coming north in here. There's still some controversy around quality of meat. It's really interesting. If any of your listeners want to take a look in the last issue of Cattleman, the November issue of Cattleman, there's quite a lengthy report in there done by the Lethbridge Research Station giving the feeding of DDGs up to, I think it's a 60% level, an 11 cent per pound a gain advantage. That's not to be scoffed at. And so I think that's where we're going to see some of the ethanol thing in the U.S. push forward and come into our backyard, really.
Switching gears a little bit into the canola market, they're talking about anywhere from 18 to 24 million acres in Western Canada. If these acres are seeded under some normal conditions, can the market digest it?
Not that much all at once, I don't believe. I think we'd have a difficult time. And I mean, we've been telling guys right now, when you're looking at the numbers we're looking at, between $11 and $12 a bushel. We've never had a chance in December to sell anything even remotely close to that high. And what would be wrong with having a strategy that you do 40% of it at $12 and look at when it does pull back? Because what goes up comes down. When some of this volatility is reduced and we see it pull back, then buy some calls if you're so inclined and cover it off that way. The reason I don't see the big acres is that there's an awful lot of those acres out there that people would probably put in canola if they could, but they wouldn't support a sprayer last fall. And now they've got 2 feet of snow and they've had another 2 inches of rain, and it's in terrible shape. I mean, in many cases it's not set up to seed something 3/4 of an inch deep.
And you're talking specifically about a lot of these acres, flooded acres in Saskatchewan?
Not even, even some of the acres that everybody talks about, the unseeded flooded. There was a lot of seeded that got flooded later. 50 inches of rain at Indian Head. I mean, where does it go? So that's one of the issues. I could put a little joke if you wish, but everybody's wondered about the fact of global warming, that we're melting all these glaciers. And by rights, they told us the sea level was going to rise, so New York should be swimming. But the joke is that it all came to Saskatchewan.
Staying kind of with Saskatchewan and a crop that's kind of gained speed in Alberta as well. Last year at this time, lentils were touted as a darling crop for 2010 as we got closer to seeding, and we saw record acres as a result. What do you see happening in the lentil market over the next 6 months?
There'll be a pullback in acres this year, no question. The reds are still interesting. The greens, again, those that have been traditional lentil growers will be back in there. Demand is still going to be reasonable. Lots of discussion about what's in the carryover. Being here, done this, numbers are terribly poor. There's really not a lot of easy ways to track a lot of this. And with Alliance Grain Traders, which has now sprung into an enormous company, their ability to split was non-existent 3 years ago. We've opened up a lot of markets to a lot more product through having that ability, and I think we'll be surprised at what the carryover is at the end of the day.
Likely a good opportunity to still pay some bills with lentil acres, though.
Yes.
What about the rest of the pulse market, specifically with regard to yellow peas?
Well, yellow peas today are trading roughly around that $7 number. Do your cost. $7 peas run, if peas work for you with the yield, I wouldn't be against seeding some.
What do you see as perhaps the darling crop for grain growers heading into the spring of 2011?
Well, probably one of the most profitable ones will be oats. We're going to see a resurgence in that oat market. Kind of one of the issues about oats is the growth in use in the U.S. And we're looking at about some of these larger companies have an appetite of about 5 million bushels this year from Canada, and we're hearing from them that could easily be 12 million by 2012.
What kind of companies are you talking about?
Big processing companies.
Yeah.
And there's more than one of them.
Some big names that you wouldn't have associated with agriculture maybe 5 years ago.
Exactly.
Yeah.
And so the use of oats, another area for the use of oats, if you go to Costco and look at it, there's a multi-grain, it's not really a potato chip, it's more of a taco chip type product. And look at what's in it. It's flax, oats, and there's a whole lot of ingredients in it, and they've even got the one down to more of a gluten-free type product. And I did a little bit of inquiring from the company that manufactures it. It's relatively a new recipe, and I've never tasted it, but it appears that sales out of Costco have been extremely good with it.
So lots of new markets opening up.
Yeah, well, they're new products, and the consumers demanding.
As we head into next spring, what are some things grain sellers should be watching when making marketing decisions, both for the crop in the bin and the one we're about to put in the ground?
Well, I think probably the most important thing is going to be making sure that you've got your cash flows in place. Credit, I believe, is probably going to be more difficult this year than what it has been in previous years. And so being absolutely certain of what you've got to work with is going to be paramount. We're suggesting that people take a hard look at taking a good portion of the 2011 production risk or the marketing risk off the table, get fairly heavily contracted, and take that off. And it's time, when you're working with the futures market, it's called futures for a reason. It's now time to be concentrating on the 2012. Would you sell 2012 canola at $12?
Absolutely, if I can lock in a profit.
And that's right. And that's the difference between yesterday and today of how we're going to treat that. And I think that is going to be the evolution of how we probably finance a lot of inputs into this business, in the fact that we're going to be spending more time concentrating on how you manage the risk. Today, the banks are making more money trading than they are lending money, so they're not really interested. So we're going to be having to look for alternative sources of credit for much of this.
Just to sum up in one word, give me your opinion on the following markets. Where are fertilizer prices headed?
Probably not as high as people think. I think somewhat higher, but not crazy high.
What about machinery?
Stable.
And the Canadian dollar?
Par.
Well, thanks very much, Gary. Obviously, wealth of knowledge that comes out of this conference and out of your group. For anybody that's looking for more information on Pike Management Group, they can go to pikemanagementgroup.com.
Thank you.
Thanks.